Good afternoon, ladies and gentlemen. We are back for another edition of Trading in the Markets with the Profit Stalker and his crew. Today, we're going to do a class, how to scale in the markets. This is part 2. I put a part 1 out. That's like an introductory to an actual trade that I actually took and did scale. In these particular examples, these I didn't trade. We didn't trade today. We didn't take any trades today. However, there were opportunities to get in and scale, but I want to be able to show you guys how this works. Full disclosure, let me go ahead and give you this. We're using, I don't mind telling anybody, we're using 2 momentum indicators. Let me get this off of here first of all, because I apologize. I have the wrong settings on here. So let me get my right settings together. All right, there we go. We're using 2 momentum indicators. And we're using the 10-20 moving average. Okay. Just commonplace stuff. We're not using indicators to trade. We're using indicators to confirm what we're seeing in price. Today, we're going to explain to you exactly what that means and how you can use this particular method to maximize your profits. So here we go. All right. We're going to go to the beginning of the day, and we're going to look at the 8100, the 900, and the 300. Again, this is I say this all the time to everybody. Price trades in volume and price. Markets, trade in volume and price. I don't care what market you're trading, it trades in volume and price. Anything else is not necessarily a true indicator. The indicators I have are momentum indicators that are designed to mimic price as closely as it possibly can with what I'm trying to see. If you want to know what we use to trade, you should look at how to read the stock market or how to read stock charts that's in my playlist. I'm going to be putting this in my playlist as well, how to scale in the markets. That's the introduction. Let's get to it. All right, so 9:30, and let me move before I get started, let me take my countdown timer off of everything here, because I want you to be able to see the charts. I don't want to have to keep moving back and forth. And I like to do like same day or live charts. I don't really like to do too much historical data because it might not apply to today's time. So that being said, here we go. All right, so first part of the day, we'd be looking for a long right there, right on this bar that I'm about to highlight. We'd be looking for a long right here. Well, Profit Stalker, why would you be looking for a long right there in that area? Number one, because price tried to come down, failed, and closed at the high, giving us a bullish bar. Okay? Give us a bullish bar there. So at that point, what I now need is I need for my trend to change on my 900 chart, my middle time frame. So now I need the momentum to shift, which it did, to the upside. Once all of that happens, now I'm looking for a pullback. Okay? A market structure pullback. I did not get the market structure pullback here, which it would have been nice to get. It didn't give us a market structure there. However, she gave us the market structure here. Also, if you hear me say this all the time, if you know how we trade, you know we trade trends and reversals. Well, I know for a fact that this is a reversal at this point, and I'll show it to you. We have a market structure pullback, and we have a ABC pattern right there. At that point, I'm putting on my first contract. At that point, right in this area here. Then, once I see the market go in my favor, right? Once I see the market go in my favor, son, I'm going to put on when it tries to come down and fail, I'm putting on another contract right here. This is typically, you can go back and look at the video, the introduction video, and it'll show you kind of typically how I do this, right? And then comes down and fails here and starts going back up. I'm entering it again here. Just me personally, okay? Now I'm looking at this point. Now I'm starting to analyze and see what's really going on, right? For me, I'm starting to analyze and say, okay, am I, is it asking some questions like, is this mature? Is this move mature, or is it just getting started when I've got my third contract on? Is this move moving with some veracity, or is it really just kind of stalling? And you can tell that by looking at stems. This is a nugget. You listen to what I'm saying. You can tell by looking to see if there are a bunch of stems or if a bunch of long bodies on the candles. If there are a bunch of stems, there's a lot of indecision. If there are a bunch of bodies, that means that people are really, really believing a thing. So at this point, I have a body and I have a stem. But then price moves and it closes higher. I would try to potentially get in another contract there. Plus, it gave me a nice little, another ABC pattern. So I probably would have entered another one right here. Let me explain something to you. And let me give you let me give you very bad numbers so that you can see. So I got in one contract at 14. My initial stop on that is 5. So my initial risk on this market, which we're trading the NASDAQ E-mini futures, is 9 points. 9 points times $20 is $180. So I'm gonna risk $180 to see how much money I can actually make. So now I got my original entry at 14. My second entry, again, I'm giving myself a bad price at $22.50. Keith, if you don't mind, would you please do the calculations on these, please? So one entry at 14, another entry at $22.50. Okay.
Okay.
Then I get my third entry at 26. And I'm cooking over here, right? I'm feeling good about myself. Then I get my last entry here at 28, thereabouts. Let's just say 30, Keith. Let's just say 30. So Keith, when you add those prices up, can you tell me what the average price is for those 4 contracts?
$22, 22.16.
22.16.
So that means they're gonna round up.
My average price is 22.16 based on what Keith has said, right? So now I got an average price of 22.16. I'm letting it go. When I get here, I'm getting out of everything. And the reason why I'm getting out of everything here, ladies and gentlemen, is because it tested these, it went down, tested these highs and failed, and then got below these lows. And then once it started going lower, I'm like, I'm going to go ahead and get out. So I'm going to get out of everything at 36. So Keith, I need you to do some quick math for me, right? So take 36, subtract 22.16, then multiply it times 4, then multiply it times 20.
Times 20?
Yes. Subtract 22.16 from 36.
Yeah. Then
multiply that number times 4. Then multiply that number times 20.
$2,857. That's some change.
You see, ladies and gentlemen? And I risked how much at the beginning? Can anybody tell me?
180.
So I risked $180 to make $2,000. That is how professionals trade. I'm going to go into it, and I'm going to give you another example. I'm going to give you 3 examples today that actually happened, because we got our mentee in here, and I'm training him today. So we have that situation going on. So that's that, right? So now we go to the next one. The next trade, and I'm not going to do any divergent trades. The only thing I'm going to do is lower high and higher low trades. The next trade is this lower high right here, right? This lower high right here. And I'm like, ooh, okay. All right. So then we get into that trade once we get a nice pullback, right? And again, you get in your first contract. I already have it here. Keith, if you don't mind doing this again for me. We have our ABC pattern. We have our pullback, our nice pullback. Now we're going to be entering this trade at about 70. Let's just say 70 even, right? Let's just say you got a bad price. 70 even, right? And then we're going to be getting in another contract here. Oh, I'm sorry. We're going to get in at 70. And our stop on this particular trade is 85. So we're going to be risking $300 on this trade. Okay. So bad price in, bad price out. You're going to be risking $300 on this trade. So now we're going to enter in another contract. Let's see what we got. That's it right there. Right? Going to be entering another contract there. And it's like, okay, she going down. So we enter another price. We're in first price at 70. Second price we're going to get is 53. Okay.
Mm-hmm.
And then it goes down again. Right? It's like, oh, it's going down again. So I'm going to get it again at 45. Okay. So let's just say, so now we got in 70, 53, and 45.
Mm-hmm.
And then I'm going to be out of all of these trades at 46. So Keith, before we go to I'm out of everything at 46. Can you give me the average of the 70, 53, and 45?
56.
56. Okay. So what I want you to do is subtract. My average price is 56.
Yeah.
Subtract 46. Right?
Yep.
Multiply that times 3. Then multiply that times 20. Tell me what number you get.
46.
How much?
10 times 3. 600.
600. So the first trade we made $2,200 on. Second trade we made $600 on. Okay. So next trade, we have a lower high right here. Have a lower high right here. Oh, okay, cool. We wait for our trend, wait for our chart to go in the trend. And then, we're going to get in this trade right here. And we're going to get in at about, honestly, you're going to get in about 68. Okay. And you're going to have an initial stop of 78. Now, there's good and bad news about this trade. Now, I'm going to show you what it is. You got in at 68, stop is at 78. You only got in one time on that trade. Well, no, hold on. I take that back. I didn't see that, guys. I didn't see that. So then it tried to go up and it failed. So I got in at 68. And then I got in my next one. Let me erase this. Erase this drawing. And then let me make this a rectangle so everybody can see it. So you're going to be getting in about here, and about here. So you're going to be getting in at 68, right? Another 3 contracts, right? You're going to get in at 68. You're going to get in another contract at about 49. Then you're going to get in another contract at 42. Okay. Keith, can you give me the average price on that one, please?
28. What are the 3 prices again?
The 3 prices are 68,
68,
49, and 43.
All right, this is short. That's what you know. All right.
And then divide that and tell me what your average price is.
Average price is 53.33.
53.33. Ladies and gentlemen, and then we would have been out of that trade at 46. So 53.33 minus 46.
7.33.
Now multiply 7.33 times 3 times 20.
What 39?
How much?
What 39.80?
All right. All right. It's 12. We don't really typically trade past 12 o'clock. So let's go to the next trade here. That was this. And then, because we wouldn't have taken that, suffered through that little bit there. But what do we have here? We have another entry. And we have our ABC pattern. And let's just hypothetically, let me see. No. We're going to do this. I'm telling you, I would not have taken this trade, but let's just say we did, because this is the truth, right? Because in the moment, you might have taken this like, it's going to continue to go down. So in the moment, your stop is 72, your entry is about 62. Keith, everybody, that's a loser. You're going to lose $200 on that trade, period. You're going to lose $200 on that trade. But you got to pay attention, because it stopped you out and then gave you the ABC pattern that you were looking for to begin with. And you get in at 62 again. When you get in at 62, you're going to get in at 62. Keep add these numbers together for me.
Yes.
62, 52, and 40. So those are the three there.
All right. 3. 51.33.
51.33. And you're going to be out of that trade at, I'm not adding any more to this one. I might, but I'm not going to say I am. I'm not going to say I am, because I probably, just being realistic, I don't know about if I would have been adding it here or not. But I am going to tell you what we're going to get out at. So we're only going to add. No, I'm telling you now, I would add it. So do you remember the three numbers, Keith, or you just have
Yeah, I
that?
got them already. It's 51.33 is the average. Do you want to add another one to it?
I'm gonna add two more to it, because I'm telling you now, I would have added another one, because everything's down at this point. So I would have been adding again at 31.
31.
And I would have been adding another one at 20. So we'd have been in 5 contracts on that trade. All right. And on that trade, you make what? You would have been getting out at 24, 25. So let's just say you got out of everything at 25. So give me the average price, Keith.
Average price was 41.
And we're getting out of everything
25.
at 25.
Yeah, that's 16 points.
Okay, so multiply 16 times 5
90.
times 20.
5 times 20 should be 1,800. 1,600. That's not right.
So
80, that's right. That's right. 16 times 5 is 80. And then times 20 is 1,600.
So the original risk on that trade was $200. So ladies and gentlemen, this is how this goes, right? Listen to what I'm telling you. If you learn how to scale, you will be risking I'm talking about 1, 2, 3, 4, 5 trades. We only won 75% of the time. We had a losing trade. But on the winning trade, we made $2,200, $600, $439, and $1,600. Keith, can you add those numbers up and then subtract 200?
1,500
plus 439 plus 600 plus 2,200. And while you're doing that, I'm going to go ahead and make sure I show this last trade here. These are all the trades, ladies and gentlemen. This one here. And this one here. And we entered this one again here.
It was 4 trades, right? 1,600, 439, 600, 2,200.
Right. And it was 5 trades. Technically, I had one loser for 200.
Minus 200.
Yeah. So what's that total?
4,639.
Ladies and gentlemen, listen to me and listen to me well. If you learn this process, everything about your life is going to change. You have to learn how to, when you're right, you cannot be right enough. If you're able to be in 100 contracts and you're right, you should be in 100 contracts. But you should let the market prove to you that you're right. Because here's the other thing. I didn't even mention this. If you go back and look at this trade that I talked about, let me see if I can draw it here. I said that we was going to get out right there, right? Here at this mark. But I said we got in our last contract down here at this 20 area. If you get into trading and your trade proves right and you systematically get into that trade, let me explain to you what will happen. You will start to play with the market's money and you will start to be in profit so much that you cannot lose. I will repeat that again. If you prove yourself to be right and you systematically add on to your trade, eventually you will be in so much profit that you cannot lose. That is how professionals in the trading space trade. You risk 200, 180, 300, 200, and 200 to make $4,639. That is how you trade and turn $2,000 into $1 million in a heartbeat. The only caveat that is, you got to have the discipline to do that. Most people on the face of the planet don't have what I call iron will discipline. But if you want to become a millionaire trader, if you want to become a successful trader, if you want to become a profitable trader, you will have to develop iron will discipline. And you will have to write down every time you make a dollar and every time you lose a dollar so that you can then understand where you are. Let me tell you, but let me give you a secret. This is a literal platinum nugget. Matter of fact, I'm gonna go ahead and tell you. This is a Black Panther kind of vibranium. Is that what they call it? Vibranium nugget. If you want to become a millionaire trader, I need you to listen to the words that are coming out of my mouth. You have got to constantly see that in your mind. And you've got to constantly monitor your progress. And you've got to constantly readjust and keep making until you get to $1 million. You will not make $1 million, $2 million, $100,000, $10 until you consistently see that every day in your mind and you actually do something to try to go there, right? To try to attain a thing. And you systematically scale. You don't do that, you got a better chance of kissing your elbow than getting to $1 million. Now let me see you do it. Ladies and gentlemen, that is it. That is how to scale in trading and investing for today. Have a great rest of your day and a great weekend. Please be safe and have an enjoyable, restful weekend. Goodbye.